The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, this is the day that Clarence Beeks, the unscrupulous insider trader for the Duke brothers, is meeting in the lobby of the Jackson Hole, Wyoming, to talk about what's going to happen today. This is the ultimate of insider trading today, folks. Believe it or not, you know, you're talking about a company, the Federal Reserve Board, that is a private bank that does a whole lot of trading. And they also supply us with our money supply, which is good. Now, there's something really serious happening this time in the Fed, folks. I don't know if you've been watching the news this morning, but as you can see, there's been a lot of rhetoric about the doves and the hawks, and they're using phrases like Janet Yellen has crossed the Rubicon. You know, when Julius Caesar attacked Rome in 49 BC, I happened to be there. I had the pizza concession on his side of the river. And then also we have another guy talking about Geordian knot. That one caused me to go to the Google and find out what a Geordian knot was. I thought that was something that Michael Jordan put up when he was playing basketball, but actually it's a knot that can't be undone. So both of those things is what they're saying, that they're in a quagmire. Folks, we just heard Steve Banger, who's a Chicago trader, on with John Logan. And if you go to www.cme.com, and just yesterday, one of their economists posted a really nice 2.5-minute video of why negative interest rates are so very, very bad. And Steve Banger gave you about a 60-second preview of that, but basically what it is that interest rates that are negative forces people to keep their money from working. They keep it in their mattress or whatever it happens to be. My grandfather, my grandmother, and my grandfather's brothers and sisters never trusted a bank. They never had any use for a bank. They kept their money in a mattress at home. Well, it wasn't a mattress, but they kept it at home. And that mentality served them well during the Depression because they didn't lose anything. Whereas other people that had their money in the banks, certainly lost something. So I just think this is a big mistake. I've been saying it for a long time. Now you got a few people out there that are saying maybe that's possibly true. I don't know, but why did it take them $4 trillion to figure that out? That's what I don't understand. Do you realize that we have had one Federal Reserve rate increase in 10 years? Can you believe that? If you would have told me this 10 years ago, I would have said, oh, my dear, I don't know what's going to happen, but I would think something very, very dramatic. So who knows? But anyway, that's what we're looking at. First chart I posted in here. I'm off my soapbox now, folks. We're going to look at some charts. So hold on, and we'll see. I know the feeling, Tucker. I grew up in a very poor environment too, but we were happy. We had food. We had clothes on our backs, and that was the important thing. And the family held it all together, and we made it through, which we all will, no matter what happens to this baloney that's going on today. But this is going to be a wild one, folks. They're telling you that ahead of time. The market is basically, when these Fed guys get on and they are jawboning, they're giving you a heads up. They really are. So pay attention. You're going to see some wild stuff, and we'll see how the markets do it. I recommend staying out that first 10 or 15 minutes till you see the extremes that are made, and then you can, put your positions on. I'll show a few of these as we go through this morning and look at them. But the first one is the DAX index. As you can see, yesterday, we had a pretty nice swing bottom. Stopped right at the 127 and 61% retracement. That was exactly what happened in the E-mini S&P down there at the 2167 level. But also what we want to be seeing today is that we have some upside areas to look at and also some downside areas. But I really don't believe that over a long period of time, what the Federal Reserve is going to do with interest rates is going to make a whole lot of difference. That's just my feeling, but I could certainly be wrong like that. I could be wrong on the downside ramifications of it, but I don't think it means much, over a period of time. People are just disenchanted with the government. That's basically the bottom line. And you can certainly understand it. Look at Mylan Pharmaceuticals. They raised that EpiPen to $1,200. Are you kidding me? Give me a break. That's and it cost them $1. No, it's $2.70 to produce it, and I think they sell it for $600, and you have to have two of them on hand. So that's a little bit absurd, but anyway, that's neither here nor there. That'll all work out eventually down the road. The other point of interest is in Korea. They were having a big scandal with corruption with the government and funding and stuff, and the gentleman, with few hours to go, took his own life. Sounds like one of the Washington suicides where the person was found with 2 bullets in the backside of his head, and they called it suicide. I have to tell you a funny story about Tucson. 20 years ago, when I first moved there, I've lived there 23 years now, but it was around 20 years ago, they were having a big wedding at the big La Paloma resort right across the street from my house, where some of you have stayed that have come out to visit me. And on that Sunday morning, a gentleman went out to get a cigar in his car, and the car blew up, and it blew up so high, it blew it 40 feet in the air, and the car came down in the same spot where it landed. It was, a huge car bomb. And the next day, the Tucson police said they had definitely not ruled suicide out as a motive. Boy, you talk about being naive. That has to be the trade of the day if you think that's that. But that's actually true. You could go in and look at the Tucson paper, and you'll see that the detectives said they had not ruled out suicide. All right, I'm stalling because I really don't know what the Fed's going to do today, as you can possibly imagine. The one thing I do know, folks, and that is be long the VIX index, because that baby is getting ready to rock and roll. I mean, we have already this week, we have taken out the highs of August. Believe it or not, we did that yesterday. And this is in the midst of a market just making a high on the 23rd of August. So something really, really dramatic is happening in that realm. So watch that very, very closely. Now, these markets that I'm going to cover here quickly here is very, very important, because they're not affected so much by the Federal Reserve. They are a little bit, of course, because just of the gerrymandering around of positions. But we just made a really nice pattern in the soybean market last night. And basically, that's that's the level that you're looking at right here, right at that 974. We hit that last night perfectly. We're trading a few cents higher than that right now, so keep an eye on that one. The wheat, I still think we're going to be waiting on wheat until the Mercury goes retrograde, and we have the solar eclipse and new moon, back on the 31st of actually a week from today. We'll be looking at that, which will be a very interesting thing, to look at. But I wanted to just to show you what we're looking at here with this VIX index. And remember, you'll see that we've actually, this chart matched the high that we made earlier in the week. So we've actually took it out by a penny or two, but this has tremendous potential, folks. So buy in November. I'm buying November calls. Try to do a 15. It probably won't cost you that much. And it's got tremendous potential. And we'll talk about risk when I get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to take a trip down memory lane here, so bear with me. This is a chart of the Dow Jones Monthly going back from 1921. Actually, through 1934. You see the bottom in 1921, which led to an 8-year bull market that was the most historic up until the 1983 when I guess. But as you'll notice here, the first green line down was the absolute crash of the market in October of that year. You notice after the crash, the market rallied 60%, just shy of 61.8% into April of 1930, and from that time it gave back 96% of all of its move. It had a high of 383 on September the 3rd, and it had a low on July the 5th, 1932, of 41 in the Dow. Then what's important here is what I want to walk you through over the next 10 years. You'll notice the market had a 50% rally, and then it pulled back, and it made a beautiful Gartley pattern in 1942. And believe me, folks, that was a pretty tough time to buy stocks because if you'll recall, there was a man named Adolf Hitler causing all kinds of problems all across the world, but that was the best time to be buying stocks in the spring of 1942 when Britain was in danger of not even being Britain anymore. But what I want you to remember here is look at this 1942, because I want to revisit that and show you the importance of the work that Bill Ehrman did when he's done all of his historical work. So what I'm going to do now is to post the chart here that Kevin Murphy, one of Bill's disciples, sent to me this week. You'll notice, if you'll see on the very far left, you'll see that 1942 low. That, folks, was a 61% retracement of the low from 1932 on July the 5th. Absolute perfectly. And he does his time counts, all of the stuff that he does with times. And then as you can see, the market moves up in beautiful wave format, whether it's Chapman wave or Elliott wave. I prefer the Chapman wave to the Elliott wave because it's much easier to understand. But as you'll notice, all of these swings and everything are related by time, and that's what he's trying to show us about this report here of August 23rd of where we are now. Bill passed away just recently, so his work hopefully will be carried on by Kevin Murphy, but I'm not sure. But this is all related to Fibonacci time counts, and all I do is I look at the price objectives in these panels. But as you can see on this chart, you're seeing the 1, 2, 3, 4, 5 expanding triangle perfectly. And at the very end there, if we did daily, we've already seen it many times in the newsletter that I put out, and then also the things that I post here into the room for the Tiger Den. It's the same type of pattern that we've had complete. Plus, we're getting divergence, between the transportations, and some of the other things. So that's the real thing of what we're watching here. So that's the main thing to look at. And I think it's important to keep in mind. Oh, the next big drop, Duffy. The bottom of that big drop will be October the 6th at 10:20 in the morning, New York time. I'll get back to you on the price. I have no idea. Nobody else does either. All I'm saying that these things are set up like nothing I've seen before. If those of you, back in March of 2009. That was the best buying opportunity in the history of the world, as we saw in the charts. And, whether this is going to be the best selling opportunity or not, but you've got to take a shot. That's why I think, buying a call in the VIX is the way to do it. Excuse me. I mean, the premiums are not that bad, but the way that thing moves, it could be, it could go 10 times and not even be crazy. It's nuts because there's a lot of people out there that are scared and they're not showing it. And if they are showing it, they're doing a great job of hiding it. Don't want to play poker with those dudes, that's for sure. Okay, let's get back to the markets here. One of the markets that we're watching for Fed time, of course, is the gold market. We've got a real interesting situation here in gold. I want to put this up so we can take a look at it. Yesterday, as you recall, we were looking at that gold down around that 1320 level. Mr. Z put a post in there right after it hit that price, to be a buyer. And right now we're rallying up. We've just about hit the 61% retracement from the last night's low. That equals the last rally that we had, which was about $15. So we did get up to 336, which is we hit 337 actually, which was the harmonic number in gold. So what I think will happen, and this is my opinion, boys and girls. So just remember here. You see where it says gold rally into Yellen's speech at 10 a.m. It has the potential to do that easily. If you go back and look at some of those spikes, it could very easily do that. So that 1353, 54 area will be important. But the other area that will be very important is 1342 in that area of 1342, and that's because it's the 61% retracement of the lower high and the 78% retracement of the other lower high. So the two areas to watch in gold for the report are 1342 and 1352. Frankly, I am a sold out bear. I've covered everything and I'm waiting to sell the stuff back. That's what I want. I still think we're heading down to the long-term daily objective of 1275, but that's my opinion and that's the way I'm playing it. We'll have to wait and see. A week from today, we have a very, very big cycle coming due, folks. We got a solar eclipse, and we got a whole bunch of other stuff going on. Solar eclipse, new moon, and Mercury goes retrograde. And we got our friend Bill from the planet Jupiter, Florida. Bill, are you there?
I'm here, Larry. How are you?
How's everything on the planet Jupiter today, Bill?
Well, I'm very concerned, like you are. Whenever the Federal Reserve is meeting or the government is in session, it's a scary time for the rest of the citizens of our country. Larry, quick comment. So obviously, the central banks all over the world, including the United States, because governments have become huge spenders, huge borrowers, and I don't know what they're doing with the money, and I don't know. It hasn't seemed to help the economy of the average citizen. But because they have such huge debt, they can't afford to have interest rates go higher, which has distorted our financial markets to no end. And I can't imagine you don't agree with that.
Well, the problem is that these GDPs, I mean, Japan has a GDP of 400% of their debt load is 400% of GDP. We're 250%. And there's others that are all, somewhere between 250 and 400. So they've been borrowing money to do everything because, their tax revenues are down and they're giving money away. Look what we've given away with Obamacare. And, all the other stuff that goes on. We have more people on food stamps, 44 million people on food stamps. That money's got to come from somewhere. And the Clinton Foundation can't fund it all. So my assumption is that, the bill has to be paid. And debt at this size never gets repaid. So it's got to be repudiated. And that's where the real problems are going to lie because you're going to be looking at something crazy. That's why always have a little gold and a little silver on hand. I firmly believe that. I don't trust the politicians.
No, none of us do, Larry. So here's a really important question to me.
Bill, stay with us. We got to pay a few bills, but stay with us and we'll take your question, okay?
Great.
Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill from Jupiter, Florida. Bill, are you still there?
I'm here, Larry.
Okay, and what you had another question that you wanted to ask?
I do. Maybe kind of a two-part question, I guess. You've, as a veteran trader, you've experienced some of the most difficult markets ever in the history of capital markets. I don't know which one you would consider to be worse, but let's take the 2008 period, and I know you were trading through there, and that's, at that point in your career, you're about as experienced as anyone could ever get. What was it like to trade in that period? Were you able to trade? Were your percentages the same? Was it more difficult? Can you just give us your, what happened during that period and what the trading was like?
Oh, sure, because I had met Tom O'Brien back in 2005 or 2006, I believe, and then I was a guest on the show a couple of times, and then in October that year, I think I started doing the show, and of course we had a pretty big top in there. But what happened in 2008 was very unusual because we were in a market that was coming down very hard and kept breaking support. And fortunately, we were very bearish. But the problem happened, Bill, because you had to be up sometimes in the middle of the night because you'd have these tremendous rallies coming out of Europe. And this was when the S&P would rally 50 points, overnight while you were sleeping. But by the time you came in, it would be unchanged. And if you weren't there, to catch some of it, you were able to miss it. But they traded normally all the way down through the bottom, all the way through 07 and 08. To make our final bottom in 2009. The markets never really changed very much. In all the years I've been studying the markets and looking at them, I've never seen anything that would say, wow, it's really different this time. I've never had to say that. They always look the same to me. Even, they might be a little more volatile or a little less volatile, but they're the same. They're really no difference.
Wow, that's amazing, and that is extremely encouraging, Larry, to hear that, because obviously, as you're indicating, and I know we're hearing it everywhere, it just appears to be rather a big event coming in the markets. And obviously, I don't know how the debt gets resolved. It doesn't. It gets wiped out. What does that do to the economy? We're just in for maybe some difficult times.
Well, Bill, I'll tell you, just from just reading the old books and everything, what goes around comes around. And frankly, I think that our millennials are going to have to learn a very hard lesson, much like my ancestors did after they moved here from Italy. They thought it was the land of gold and honey, and it took a long time for that to happen. What people don't realize, after the Depression, the top of the market in 1929, it took 37 years for the market to take that high out. Now, I don't think that's going to happen again, but if you remember, in 1929, 1930, we had some of the greatest inventions in the history of the world. We had the telephone, we had the radio, we had the television, we had the automobile, we had electricity. All these things were huge, and they continue to be huge. But for a long period of time, we had to go through a period of really bad pullbacks and stuff. Whether we have that or not, I don't know. Maybe not in my lifetime, because I'm in a 7.5 race of a 8 furlong race, so I don't know, but we'll see. The good thing is the markets are going to be okay, and we're all going to be fine no matter what. That's the bottom line.
No, that's wonderful to hear, Larry, that you're able to trade through those type of markets, and that really trading doesn't change all that much, other than some extreme volatility on certain days. But in general, you're able to continue to trade using, your methodology and others using theirs. So that's a wonderful thing to know. And yes, we're going to get through it, and that's an interesting point. We live in a great age, as difficult as the times are, and who knows what new technologies are coming around that may save our economy or certainly add tremendous wealth to our country and the world. So it's a good time. Larry, it's always great to talk with you. Thank you very much.
Thank you for calling in, Bill. I really appreciate it. But one final comment, Bill. Remember, I was the last person to say that TVs were here to stay, and I'm still not sure about microwave ovens. So just remember that.
Good talking, Larry.
Yeah. Thanks for calling in, Bill. I appreciate it.
All right.
Okay. Well, you bet. All right. We'll get back to the markets here. Yesterday, we were talking about the natural gas market, because we had a really nice pattern fulfilling in the natural gas. I wanted to put this up here because we're still up in this same area where the pattern is still, up in this area here, where in this area of 283, where it should have some resistance. We're matched the high of yesterday, and that's pretty much, what we're watching here to take a look at it. As far as Yellen speaking, I believe they have a pre-report coming out a few minutes before she gives her final speech. But frankly, folks, they already know what's going on. I don't know if you folks remember Robert Rubin, who ran Citicorp for a while, but he was also Secretary of the Treasury. He happens to be one of Alan Greenspan's very best friends, and they used to meet several times a week. And I'm sure they never talked about the markets, but who knows? Anyway, let's take a quick look here at the silver market, because this is the one that I think, because we're in this downtrend, and I believe that I agree with Steve Banger here, who was the ghost, sorry, Steve. He was the guest on John Logan's show, is the bearishness that we have here in the oil, in the silver. So you could get $1 rally in silver up to 1960 per ounce, and it'd still be bearish. So if this is in fact the big bottom down here at 1850, it'll give us a chance, I'm sure. But right now, you have to trade this to the downside. I believe we've got a pretty good chance of seeing a better bottom coming in with the solar eclipse, new moon, with Mercury going retrograde on that week. And we will certainly have Shane Smolian on the next week if he's available, and also our good friend Norm Winsky from Astro Trend. We want to get both of those fellows on. And I'm also trying to get Bill Meridian on, because from Vienna, Austria, Cycles Research, because he was able to spot out that, we were getting ready for a turn down here, which so far this feels the way that it's working. So anyway, that's pretty much what we're looking at this morning. Now, the bond market is another one. Interest rates to me are going higher. They've been going higher for quite some time. The market just hasn't, paid any attention to it. But as you can see here, we have some pretty big targets down here in the bonds down around that 168 level. That's $3,000 from where we are right now. Now, if you were to get a move down to 168 in the bonds today, I would certainly take a look at that from the long side. You'd have to risk about a point, but that would be a really good one to look at, because that would be a pretty much of an outlier event, much like we had when we had the Brexit. If you'll notice back there on June 24th, we had that huge move in the bonds that carried on for another few days, and then the market, went back to doing its own thing. And that's what we will be doing. See, eventually the market is going to say to the Fed, hey, you don't really know what the hell you're doing. And I said the H word. You will have to be able to do this yourself, and that's what we're going to have to do. They have extended the normal 4.5-year business cycle over 2 cycles, and that's not good. One rate rise in 10 years. Hello, Federal.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I've posted a chart of Google in here because I've had several requests to look at the stock. But the thing you look at, if you'll notice the beautiful harmony in this thing, it goes down and makes a double bottom, as you'll see that 1.00. That takes out the previous low by 1 or 2 cents in a stock that trades for 700. And look at the high, takes it out by a penny or two. I mean, these are things that you really want to pay attention to, because remember that those old highs and old lows are not where you want to put your stop. They have to be put beyond that by just a little bit, because that's where the naive or neophyte trader would put their stops. Give yourself a little bit of room when you're doing that. But you can see the ratios on this are very, very important. Now, the one that's going to be the most important today to watch with the dollar index coming in today with the Federal Reserve, because dollar are what makes the market move. As you can see here, back a month ago on the 25th of July, we were making 5 ratios coming in at the same price on the U.S. dollar index. As you can see here, the market backed off to a perfect 135 pattern. As you can see, the cycle low between May and June is equal to the one from June to July, to August. That makes that 135 pattern that was the favorite of Roy Longstreet and his son Bill. But with 5 ratios up there, that tells you how important you are. But you made a beautiful correction here in a bull market, because you've been in a bull market since May the 2nd. And so this is going to be the key level to watch today, because if we go below 0.5, that tells us the dollar is in trouble and the euro is most probably going to be heading towards 114. But that's not the way it looks right now. If you had to hold a gun to your head, you want to be long the dollar, short the euro into the report. Now, they could change everything by what they're going to announce, but by looking at the charts, that's what the market is telling us at this particular time, to be long the dollar and short the euro. And the short euro trade is very interesting, because it's been very, very quiet here for the last few hours. Let's just bring this up here. This is a 30-minute chart here over the past few days. And as you can see here, we've gone up and touched the 61% retracement last night up at that 113.10 level. And we backed off, trading a little lower. But this thing will be all over the map when they start to give the words out, which are going to come in about any time now. I guess they'll be releasing the notes. And of course, someone gets those notes before we do, and you'll start to see the action in the market, and that'll be the initial reaction to the Fed. But it could change right after that, because the words that they say and the things that they do could be be totally different. That's why I highly recommend that you wait to see the early cannon fodders, all the early shooters, people that shoot their bullets right off the top. Wait till they're out of the way and run out of ammunition and get the market trading normally. You don't want to get caught in one of these, straight up or straight down moves. It's okay if you're on the right side of it, but wait till the market settles down a little bit, to realize that there's some normal buying and selling coming in. That usually takes about 15 minutes to half an hour, and then you have a better place to assess the risk of putting on the trade, because the profit potential is always there, but on the other side of that, you can be looking at some really bad risk parameters. The only problem I have here is that I'm on a radio show, which is not easy to do every day, and then I'm asked to give opinions, and I stuck my proverbial nose into the beehive yesterday when I recommended these calls in the VIX index. In other words, I think the VIX is going to rise, and I was looking at the calls for November. So that is, that's pretty much what I'm looking at. The question that someone's asking is, the market is up now, but it's not up enough. You're only up 5 or 6, 7 points in the S&P. You'd have to be up a lot more than that. I don't believe that anything is out right now. So I have my eye on the CNBC channel just to see if breaking news comes out. But frankly, I called Janet this morning up in Jackson Hole, and I asked her not to say anything till I was off the air so I wouldn't get my foot farther down my throat than I usually do. So we'll see what happens to this. But anyway, by the end of the day, you're going to have a pretty good idea. Then it's over to the next one. But the fact that they're arguing at the Fed, and you can tell that by they had 4 Fed governors on last night, and they had Atlanta, St. Louis, San Francisco, and Dallas, and they were all very, very hawkish. They were getting ready to raise rates. So that's 4 out of the 12, but they don't count votes there. They weigh them. And she is the one that weighs the votes. So she's the one, just like Greenspan before her, or what's his name, Bernanke. They are the ones that determine the final Fed process. And who determines what they say? No one only knows, but who knows? Okay, it'll be out pretty soon, so let's not worry about it. There should be some pretty strong resistance up and around 1385 to 1390. In the E-mini S&P, anything above 19. Wow. Let's try these one at a time, Larry. 2185 to 2190. That's basically, see what's going on. Okay. All right. Let's move on here, and we'll see what's going on and any other questions that we might have. I covered the Google. Someone asked a question about the biotech index. Folks, that thing looks like it wants to go lower. In fact, all of these, the charts are set up to go lower. They might go higher. Maybe the Fed's going to reduce rates even further. I don't know, but they certainly have a situation where you could have a pretty good run up to look at this. We just hit a 61% retracement in the S&P E-mini. That was one. If you remember the chart that I posted early this morning, the first key area to watch was 2180. We got to 2180.50, so that fulfills that first objective. Let's try to do these words one at a time, Larry, and then we won't get in any trouble, but we'll see what other trouble we can get into as we look at some of these things. Let's just see if I can find that little puppy, and we will put it back up here again. Oh, dear. Boy, I get too many of these here. I'm getting too old to do this. Maybe this is it. Nope, that's the gold one. I don't know. Maybe it's going to be a non-response to this, folks. That's always a possibility. Maybe that's what's going to happen. Oh dear. All right, let's not worry about it. I'll try to find it as I talk through this, but right now there's not very much happening. They should be talking pretty soon about what the market is going to be doing. I cannot find that E-mini chart. Doggone it! I had it right here. What's going on? All right, not to worry. Oh dear. This is the frustrating part. I put this in categories, And then when the category comes up, I can't find the darn thing. That's the way it goes. Okay, anyway, 2181, 2180 is the first area, and that second area was up another 5 points at the 2185, going all the way up to 2190. But there'll be a lot of volatility, I would think. So we'll see if that's going to be the case. But one day with the Fed is not going to change a whole lot. I can promise you that. They've already done everything they're going to do, and they could continue doing it. You know what I mean? You don't know what's going to happen, but watch and see, what happens, because, there are people out there now that are pretty smart people, or at least they think they are, that are saying that, maybe this situation that you've done here over the past, 8 years with only one interest rate hike and all this quantitative easing is not really a good thing, because you force people to stop investing because you're not making anything, especially if you put money in the bank. They're giving you 0.5% or something, and in Japan they charge you. 877-927-6648. Kelvin.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, right now we are going to be looking at the market with the Federal Reserve coming in here. I prefer personally, what we do is we don't trade that first half hour till the market slows down. What we do is we might have a order setting out there way outside of the realm of where you think it could go, like selling gold at 1352. That would be one we would be looking at. Also buying gold at 1309. something like that is what would be buying bonds at 168, selling them at 174. That type of a thing that I'd be looking for. But that's basically it. I don't really like to be in that first half hour. I never have. And no sense starting now, because if you go back and look at the history, it just takes a little while for the markets to settle down. And then even during Brexit, Brexit, we were very fortunate because we had a position on in the British pound that had been working, and it worked incredibly well in our favor. And we also had a euro trade on that was worked out really well. And we happened to be long some gold, so everything worked out that day. But you just don't know that. But that was a vote that had nothing to do with the Federal Reserve, and we were really going along with the price pattern, and everybody had expected the other thing happening. So, any surprise would have been the other way, and that's what happened. So anyway, take a time out here and wait until they get through with this baloney, and then you'll be far better off. But that's the way it looks like here from the cheap seats. Anyway, we'll keep an eye on these things. But long term, I'm still very, very bullish gold and silver. But I'd like to buy gold down around that 1275 level, 1270. That's the main thing that I want to be looking at. So that's one of my favorite things. Also, I like being long corn in these areas. I think corn has a pretty good chance, as our good friend Rich Anderson from Anderson Capital Management mentioned yesterday, that it looks like it could be some good value down at that area. Finally, keep an eye on the Japanese yen, because if we go below 99.20 in the Japanese yen, 100 points from where we are right now, you could be looking at 95 in the Japanese yen without too much. That's down from 126. 3 minutes to go and 43 seconds to the Princess Speaks. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.